love the hype music. Wow. All right, guys. Thank you for coming to our TED Talk. And thank you for being on the panel today, guys. Excited to be here, excited to be in Dubai. It's my first time, so I'm very, very hyped. Well, let's get into it. Bringing TradFi markets on chain has been a big theme of 2025, but let's take a look back at 25 and this mad push, this mad rush, I would say, to bring the traditional financial markets on chain. What would you guys say was the biggest catalyst or the biggest signal that you saw? Let's start off from a macro perspective that really kind of was the signal like, okay, this is it, making that a reality of bringing these traditional markets into crypto.
I would say if you look at the last 4 years before this year, the main symbol was governments were against crypto. Mm-hmm. All over the world, and mainly in the US, there was an adverse reaction to crypto. Now, this changed obviously this year, and I think the biggest symbol of this change actually was seeing governments start adopting crypto in some of the operations they do. So one of the projects we had this year, which was around 3 months ago, was with the US Department of Commerce. It was bringing GDP data on chain.
Right.
So now you basically went from 4 years from governments, which are the biggest enablers of any technology ever, right? Like you need governments to be on board for a technology to be adopted, going from being averse to the space to actually adopting the space. So I think that was the biggest symbol of change. Now, that's what you see, that's what's visible. What's invisible, which is more and more visible today, is every single TradFi institution now has a digital asset strategy. Mm-hmm. They have a stablecoin strategy. They have a very competent team working on Web3 adoption, on blockchain adoption. This didn't exist even 1 year ago. Now, if you go to a TradFi company and they don't have a blockchain strategy, they're delayed. They're doing something completely wrong.
So macro perspective, what about from a Chainlink perspective?
From a Chainlink perspective, what this means that the number of institutions we were working with last year was maybe, in the now it's maybe 10x. Okay. So I would say the number of projects, the number of work we're having with all of these institutions, and even with governments, as I was saying, has like 10x basically.
All right, Ian, same question.
Yeah, it's been a very interesting, couple of years. This entire cycle has been institutional driven in a way, right? Yeah. I think it started with BlackRock launching the ETFs, most successful ETF ever, but that was really the starting point of the institutional cycle. BlackRock then went on to launch a tokenized treasury fund, which is what Ondo does too. We were extraordinarily excited to see that because the largest asset manager in the world is now tokenizing treasury funds and making it available on public blockchain rails. Like if you would have said anyone that 5 years ago, even 3 years ago under the previous admin, they would have been like, you are absolutely out of your mind. And that just really, I think, kicked off a bit of an arms race among institutions. It had been happening before. So before I joined Ondo, I was at a company called McKinsey, and I was helping a lot of traditional financial institutions kind of get on chain. And the first project on tokenization I did was back in 2016, long time ago. And obviously, there's been a couple of cycles, but you could start to see the institutional appetite, give or take in 2020, 21, really post DeFi, really start to pick up. Obviously, we had FTX, everything got a little bit of a dent, but you could tell that there were certain large asset managers that were taking this space seriously and started to invest in it. They didn't really go away. Like Franklin Templeton is a great example. Mm-hmm. They kept investing into the space. JP Morgan, that we did a pilot with, is another big example of that. But it still materially changed, I think, post-ETF launch, and then particularly this year, the Genius Act. Like, hands down, that was the watershed moment where everything changed, and every single bank, every single traditional financial institution right now is trying to figure out what is my stablecoin strategy and how do I get on these public blockchain rails. The amount of FOMO in TradFi right now, quite frankly, is pretty intense. And that's great for companies like Ondo and Chainlink because there's not that many reputable companies, crypto native companies, quite frankly, that these TradFis can work with. So that's why we're partnering up to kind of help bring some of these companies on chain. But if you were to ask me one moment that really crystallizes when things changed, I would say Genius Act passing and the FOMO that followed.
And then would you say Genius also for Ondo as well, in terms of your business model?
Yeah, I mean, Genius, I think, was slightly more focused on stable coins. We do tokenized treasury, stocks, ETFs, et cetera. So it's a little bit tangential, but a lot of people look at stablecoin, like a stablecoin is by far the most successful tokenized asset right now, right? Stablecoin is just tokenized cash. That's essentially what it is. And it doesn't take that much to then make the mental leap to say, wait, if a tokenized cash is so much better than normal cash, because I think most people, once you've used a stable coin, you can't go back, right? You look at your bank account and you say, oh, that's silly. Once you know stable coin, a lot of people are like, oh, okay, the same benefits of 24/7 value movement, composability, use it in DeFi, transfer it between platforms 24/7, I can now start to do that with treasury assets, with money market funds, with stocks, with ETFs. It's a very logical narrative leap to go from a stable coin to every single asset being tokenized. And that mental shift in TradFi is starting to happen. You're starting to see some of it. And that makes my job, quite frankly, significantly easier.
It's been such a rapid evolving landscape, I think, over the last 6 to 12 months, right? You guys both have products that you need to run through compliance, and that institutions are now coming in to say, hey, we're interested. From a Chainlink perspective, Johann, I mean, you guys have the oracles, right? That's kind of Chainlink's like major business model. How are you guys sort of scaling, but also thinking about compliance when you are marketing and you are having these conversations with these big institutions, and they're coming in saying, we're interested? What are those conversations like, and how are you scaling, and how are you thinking about compliance there?
Yeah, it's a good question. I mean, I think for us, the main thing to take into account is since we started, and since 2017, we've been thinking about tokenization. The whole idea of an oracle is how do I not recreate Tradfi from scratch, but how do I connect it? So you basically connect the old to the new so that the old can become the new. That's been our vision since 2017. And that's what an oracle does. That's why we didn't create a chain, we created an oracle back in the day. Now, for us, there are a few things we take into account when we do tokenization. You need to look at the whole life cycle of a token. You want to issue the token, you want to distribute it, so you want to transact, and you want to give utility to this asset, right? The first part with issuance requires compliance. Right now, most of the compliance is directly off-chain. We want to make it on-chain. So we launched something called Automated Compliance Engine, which basically allows any TradFi institution to take their KYC, AML, identity tools and plug them directly to the blockchain. Now, what's the value here? Instead of compliance being reactive, it becomes proactive. You can now do it directly on-chain, meaning you don't need to be delayed in your compliance work, right? So that's the first thing. This solves issuance, and this also solves transactions. The second thing is data. In order to bring any utility to an asset, you need to have data around it. If you want to use it as collateral, you need to know the price of the asset. You need to know the identity of the holder. We've been working on data feeds since 2018, I would say, and currently Chainlink secures around 80% of the whole of DeFi with our data feeds. The same product we launched for DeFi is bringing utility for TradFi to ensure these assets can now be used for collateral, for loans, etc. The last part, which is the most important part, is transactions. By the way, the whole space is built around transactions. This whole space is a way to own tokens and transact with them. So if you can't do transactions well, you can't have a space, right? And right now, if you look at our space, it's very hard to coordinate transactions because you have hundreds of blockchains. That's been the last piece we've been bringing. It's cross-chain. How can I have a tokenized asset that can flow from one chain to another through one global standard? So basically, our vision has been, we've been working on this product since 2017. We need all of these products to be able to create a life cycle experience for the tokenized asset to be issued, transferred, and used. And we're compiling both identity solutions, data solutions, cross-chain solutions to make this happen. And the overall vision is one single standard instead of 50 standards, which you have today with, when you have 50 chains, you have 50 standards, one standard for each chain. So you replace this with one overlapping standard, which is a standard we're building with our partners, with Ondo, and many other Tradfi institutions.
You just explained a lot of things there.
I know,
when
I
you
know.
go into meetings, no, I'm curious. When you go into meetings with these big institutions who, understand Wall Street jargon, right, but not necessarily crypto jargon, how receptive are they to things like this, to things like Oracle, to things like DeFi? Are they getting better? Are they learning? Are they understanding more?
Oh, they're super receptive because look,
Yeah.
it's not like we're starting. We've been speaking to them since like 5 years, I would say.
Yeah.
So now they're to the level.
Yeah, they know.
Now many of them know more about DeFi than many Web3 people.
Yeah.
It's the amazing thing. So they're to the level now, yeah.
I think when you look at it from a media perspective, right, like crypto is a relatively new thing in the trad media, as we would call it. So, but like behind the scenes in TradFi, as you guys know from your building with JP Morgan and Connexus, it's been going on behind the scenes for quite a long time. Ian, I want to talk to you about this notion of, sort of these gatekeepers, these TradFi gatekeepers, because there is also this notion of catching up, right? Crypto has been far ahead with things like tokenization. It's obviously a very lucrative business, and crypto has been on the forefront of it, but these traditional actors, I won't name names, but there's a certain clearinghouse that might be trying to put restrictions on actors who, crypto actors in the space from, being able to conduct tokenization on like a broader scale and maybe just offer it to members of that certain clearinghouse. I'm being a little bit cryptic here, but basically my question to you is, what are the potential long-term economic implications if only these sort of established institutionalized players can play in the sandbox of tokenization? And is the space doing anything to sort of remedy this?
Yeah, the question of gatekeepers is definitely a very timely one.
Yeah.
To your point, there's been a lot of traditional financial institutions that have looked at this space, said, that's cute, I'm not sure what I want to do. For now, I'm happy to be, I think they call it a fast follower, right? The moment things really happen, then they start moving because they think that they can move quickly enough. But I think a lot of them, particularly post-Genius and with this new admin, everything changed a little bit too quickly. And some of them kind of are trying to figure out how they can catch up as quickly as possible. And gatekeeping is one way to do it. I will say, right now in the tokenization space, there are two markets, there's two worlds. There's the US and there's non-US. There's a lot of stuff that's possible in non-US already. Our assets, we issue tokenized treasury funds, we issue tokenized stocks and ETFs. These assets are available outside the US in the primary market, and we issue them in a permissionless fashion. What that means is think of them almost like a stablecoin, right? If you want to mint them, burn them, you have to onboard with us. In the secondary market, these assets can freely flow wherever. So they're permissionless assets. You can hold them in a Web3 wallet. In fact, the Binance wallet listed our tokenized stocks last week. So now every single Binance wallet user can buy tokenized stocks permissionlessly. That's pretty impactful. But that is a very different model than what you can do right now in the US. And when some of these TradFi institutions look at this model, they're like, wait a minute, I'm not sure I like this. Because they also don't necessarily know how to play in that area. But part of the trade-off, or what is going to be interesting to see, is everything permissionless and DeFi and what we talked about is already available outside the US. So if the US is serious about becoming the home of next generation capital markets, there's only so much gatekeeping they're going to be able to do. Otherwise, whatever framework they implement, it basically just means that the US will not be very competitive. So I think that, in a way, is the tension that some of the regulators are also now dealing with. How do you harmonize and how do you deal with a very competitive global landscape? Because the European Union as well, they've issued a bunch of rules on tokenized assets. Our assets have a prospectus in the European Union, can be offered to European retail investors in their permissionless form. So with all of that in mind, I think the US administration and agencies right now are just trying to figure out what is the right balance that we can strike to basically have the right investor protections, as well as a lot of the permissionless innovation that our assets enable.
And where does that clarity, so to speak, come from? Does it come from market structure? Does it come from rulemaking at the SEC?
Yeah, I think it'll be a little bit of both. Market structure is a very important component. The SEC rulemaking, the exemptions, there's been some talk about a sandbox. I think there's a wide variety of ways that you can do it. This administration is definitely focused on addressing all those questions, and we personally very much look forward to working with the admin and the agencies to help bring that clarity.
Cool. I want to talk a little bit about the Connexus blockchain that you guys are both working on with JP Morgan to bring bank payment rails to tokenized asset markets. Everyone's racing to tokenized assets right now, as we've talked about. Very few have actually tackled the payment and settlement layer aspect of it. What needs to happen next to make cross-chain DVP a live product rather than a pilot? And I'll give this one to Johann.
Yeah, I think there are two parts here. I mean, the first part is we need tokenization to go beyond what it is today, right?
Yeah.
We need more and more stuff to be tokenized. I think tokenization and adoption of our space will come from two sides. First one will be demand, the other one will be efficiency gains. So efficiency gains, a good example is what we've been doing with some FMIs. We've been working with Swift, we've been working with DTCC on some projects. For instance, one of those projects was how can we reconcile corporate actions? Corporate actions today are a huge nightmare to basically reconcile across tons of different actors. We had a project that was piloted last year and which is going to its next stage this year with 24 different institutions, Swift, DTCC, Euroclear, etc. How can we make corporate actions fully automated and transparent through the blockchain, right? That's one good example on how you bring efficiencies to FMIs. A second one is demand. The space adoption will come from demand. Now, tokenization, I think, has one killer use case. It's for corporate treasuries. Today, corporate treasuries have seen the impact that 24/7 wrappers around US treasuries can have, thanks to Ondo and the work of some of these pioneers. Now, the second part to making corporate treasuries really adopt on-chain treasuries will be getting tokenized cash. So it means getting banks to start tokenizing user deposits, so you can now have a flow between user deposits and tokenized treasuries directly on-chain through cross-chain interactions, right? So I think it will be pushed mainly by demand from corporate treasuries, which have tons of cash and need 24/7 liquidity. It will probably be prototyped by asset managers, and then the banks will be bringing the cash rails by tokenizing the deposits on-chain. I think that's going to be the quickest path for adoption, and I think we're really not far away. I think this is 6 to 12 months to start seeing some of that stuff happen on-chain.
Yeah. Just reminds me of the conversation we had the other day, Ian, about treasury bonds and how they could eventually come on chain and how much they would do for the liquidity behind stablecoin transactions, right? It would basically provide instant settlement. It wouldn't be so much backlog of because you could really just the on-chain markets would move much more efficiently if that were to happen. And it could be something that Ondo, might be involved in somewhere down the line. You never know.
Yeah, wouldn't that be something?
What would need to happen, I guess is my question, for the Treasury Department to say, hey, we're gonna issue tokenized bonds?
Oof, yeah. I mean, that would truly be a watershed moment. The largest bond market moving on chain, directed by the U.S. government.
I asked because the Commerce Department has been working with Chainlink, right, to bring economic data on chain. So government moves slow, as we know, but they do move, and
they do move.
This administration has an interest in blockchain technology. So never say never is my.
I would definitely never say never on that. That's for sure. No, and I think if any administration is going to do it and wants to make a play to do it, I think it's probably this one, right?
Yeah.
The benefits. Sometimes people ask us like, okay, but why would you even do something like that? So I think it's just helpful to illustrate to some people is like, why does all this stuff matter? Why would the fact that the US Treasury is going to start doing native issuance of treasuries on chain a big deal? Well, when you tokenize any asset, tokenization in and of itself is pretty straightforward, right? You just take an asset, you put it in a bank or a custodian, right, or a clearing broker or whatever. You make sure it can't move. You then issue a token against it that represents the value. This thing can move on public blockchain rails. Ta-da, magic, right? This can also integrate with DeFi. It's great. But the problem that you then run into is this stuff moves 24/7. This stuff does not. So if someone wants to redeem over the weekend, how do you make sure that there's enough liquidity in your traditional financial markets and infrastructure to actually meet those redemptions? Because people expect the liquidity that they have on chain to also be reflected in TradFi, but that's not how TradFi rails work. So a lot of our job and what keeps me up at night is trying to make sure that that liquidity in via various mechanisms can exist. But if you then get the underlying asset, like a treasury asset, to be natively available on chain in the first place, you don't need to deal with that mismatch, right? Everything just freely flows. If someone wants to issue a stablecoin Sunday 2 a.m. and then back it, with a treasury bond, if these treasury things are on chain, you can just do that, right? And that will be the magic. And I think it will eliminate a lot of the friction that is available right now in trying to bridge the liquidity issues between TradFi and on-chain environments. And so the Treasury Department moving on-chain in and of itself would be, very meaningful. If they decide to move down that direction, I think working with, leading companies like Ondo Finance and the like is obviously a way to do that. But that's why that stuff matters in the first place.
Mm-hmm, mm-hmm. And again, I'm going to ask you the same question I asked earlier. Is that a case for market structure, or is that a case for rule making?
I don't think you need market structure in order to do that. I think it's literally just, was the agency willing to do it? Do they have the know-how to do it? And the capacity to do it?
Okay. Yeah. There's so many aspects in this market. It's like, once you have market structure, there's like the rails in place and you can do all this stuff, but I think there's a lot of things that people don't realize that you can actually already do.
100%.
So, well, with that in mind, 2026 is almost upon us. So what are we expecting from Chainlink and from Ondo in 2026? We'll start with Johann.
Yeah, I think the most impactful thing for me is DeFi today is a proof of concept in many ways. It's a few $100 billion. Our main mission for a very long time was how do you tokenize the whole world's value and bring it on chain through DeFi. So our main focus in 2026 will be connecting institutions to the DeFi protocols most people here know today and use today, so we can bring our space from a few $100 billion to trillions of dollars. That's our main mission.
Okay. Ian?
Oh boy, trillions, I love it. I think within Ondo, 2025 was really getting a lot of the building blocks in place. We have now tokenized treasury funds. We have tokenized stocks, ETFs. I think 2026 really is the year that kind of everything starts to come together more and more. We're building out our own chain, so we'll have purpose-built infrastructure to really start doing asset management and investing in new ways that previously were never possible. It's kind of like how stablecoins have led the way to a lot of innovation in payments and how banking works. Mm-hmm. We're going to start to see the same level of innovation in asset management and broader brokerage, because now the actual assets have been tokenized and live on public blockchain rails.
Okay. Do I end with a price prediction? Nah, that's dangerous. Let's leave it there. Thank you, gentlemen.
Thank you. Thank you, everyone.